It's just past midnight in Washington, D.C. The city is quiet, but halfway across the world the markets are in chaos. In Shanghai, Hong Kong, and Tokyo, screens flash red, not celebration, but panic. A new wave of US tariffs and sanctions has just hit, targeting China and surprisingly India. The logic? America's getting tough on trade. The result? Global economic shockwaves. Currencies wobble, stock futures plummet, and analysts scramble to make sense of it all. The global economy is a web. Pull a thread in Washington and factories in Germany or farms in Brazil feel it. The US is wielding the dollar as a weapon, but that risks breaking trust and pushing others to seek alternatives. This isn't just a trade spat, it's a challenge to the world order built around the US dollar. As the sun rises in Europe, leaders everywhere are asking, is it safe to depend on a partner who can cut you off overnight? The answers could reshape the world. Let's talk tariffs, Trump's favorite tool. The pitch is simple. Tariffs punish China, bring jobs home, and revive American industry. But tariffs aren't paid by China, they're paid by American importers, and ultimately, by you. Prices rise on everything from TVs to car parts, hitting American wallets hardest. Past trade wars showed US consumers and businesses bear the brunt, while promised benefits rarely materialize. Farmers lost export markets, businesses lost competitiveness, and government bailouts soared. Now the new tariffs are broader, the sanctions tougher, and the administration is betting other countries will cave. But the world adapts. If you make it too hard to do business with America, others will build new systems and alliances. Instead of building a wall, the US is giving the world a reason to build around it. The result? More isolation, not more jobs. The global economy moves on, with or without America. Tariffs sound tough, but they often hurt those they're meant to help. The world is watching and moving on. Aggressive US sanctions are pushing rivals together. India and China, longtime competitors, are now finding common ground thanks to US penalties on India for trading with Russia and Iran. China offers India what the US threatens to take away: energy and markets, and a financial system free from Washington's strings. India's pivot isn't about ideology, it's about survival. The US is undermining its own alliances, like the Quad, by sanctioning key partners. Across the globe, sanctioned countries like Russia and Iran are deepening ties with China. Other nations are watching, realizing dependence on the US financial system is risky. Alternatives are emerging: BRICS, local currencies, new payment systems. The US wanted to project strength, but it's fueling the rise of a multipolar world. Sanctions are no longer isolating adversaries, they're uniting them. The unintended consequence? A world less reliant on America. The more Washington squeezes, the more others pivot away. The global balance is shifting. The US-China trade fight isn't a boxing match, it's economic jujitsu. Washington throws tariffs, China adapts, shifting supply chains and boosting domestic consumption. Chinese manufacturers reroute products through third countries, dodging tariffs. China's dual circulation strategy is building a vast internal market, making it less vulnerable to US pressure. While the US protects old industries, China invests in AI, quantum computing, and green tech. US chip restrictions sting, but they also accelerate China's push for self-sufficiency. The trade deficit remains, but supply chains get more complex and costly. China uses the conflict to rally national support and build parallel systems. The US hoped to corner China, but instead it's motivating China to build a fortress. Economic pressure isn't breaking China, it's making it stronger. The game has changed, and China is playing for the long term. Rare earth elements vital for tech and defense are dominated by China. The US tries to corner China on trade but overlooks its own dependence on Chinese rare earths. China's leverage is real. It can restrict exports, crippling US industries. In energy, US sanctions push China to buy from Russia and Iran, often in yuan, bypassing the dollar. This undermines the petrodollar system and secures China's energy future. The US is fighting with old tools, exposing its own vulnerabilities. Tariffs and sanctions risk backfiring, giving China more power over critical resources. The US needs China's materials, but its policies push China to weaponize them. The result? America's strategy is fueling its own weaknesses. In this economic war, the US is hitting China's strengths and exposing its own. Tariffs are sold as a path to prosperity, but they're really a stealth tax on Americans. Importers pay the tariffs, then raise prices on everything from sofas to cars. The result? Inflation, with everyday goods costing more. Supply chains can't just move back to the US, it's too complex and expensive. Instead, companies shift production to other low-cost countries, not America. The jobs don't return, prices just go up. American businesses face higher costs and lose competitiveness. The promised manufacturing boom never arrives. The government collects some tariff revenue, but the economic drag is far greater. The CBO projects lower GDP and real incomes for Americans. Tariffs aren't a magic bullet, they're a self-inflicted wound. The US dollar has long been the world's reserve currency, a source of power and privilege. But weaponizing the dollar through sanctions is pushing countries to seek alternatives. Every new sanction sends a message access to the dollar isn't guaranteed. Now, de-dollarization is a global priority, not just a theory. BRICS nations are building new payment systems and reserve currencies. China and Russia trade in their own currencies. Saudi Arabia is open to selling oil in yuan. Each move away from the dollar chips at its dominance. If demand for dollars falls, its value drops, imports get pricier, and US borrowing costs soar. The government faces higher interest payments, less money for everything else, and potential fiscal crisis. The dollar's power, once an asset, could become a liability. America's economic weapon is now its greatest vulnerability. The world is preparing for life beyond the dollar. The US must adapt or risk losing its edge. The Fed is quietly shifting, considering a weaker dollar to boost exports and close the trade gap. The idea? A cheaper dollar makes US goods more competitive. But this is a risky game. Currency wars invite retaliation and global instability. Foreign investors may flee, fearing their dollar assets will lose value. Combined with aggressive sanctions, this could accelerate the dollar's decline. US policy is now a two-pronged assault, pushing the world away from the dollar and devaluing it at home. The short-term gain? Maybe a lower trade deficit. The long-term cost? Erosion of the dollar's reserve status and American influence. The Fed's gamble could backfire, leaving the US weaker on the world stage. Sometimes winning the trade war means losing the bigger battle. Fast forward to 2030. The world is split into economic blocks. The US is more isolated, with higher prices and slower innovation. The BRICS plus alliance trades in a basket of currencies, immune to US sanctions. The dollar is still important, but no longer dominant. America's exorbitant privilege is gone. The US government faces austerity, with debt payments crowding out vital spending. The military's reach is limited, and Americans abroad feel their dollars don't go as far. This isn't destiny, it's a warning. Today's policies are shaping tomorrow's world. The dollar's dominance was built on trust and shared interests. By weaponizing it, the US risks a slow, painful decline in influence and prosperity. The endgame isn't collapse, but a world where America is just one power among many.